Hello again, fellow BeachBum traders. Thank you for joining us for part 2 of our weekly trading game plan for the trading week of October 23rd through October 27th, where we'll be selecting our top swing trading stocks to watch, stocks in our bullpen. We'll talk about how to maintain a shopping list, our options strategies we use to also generate income while we wait for swing trading setups to manifest themselves, and we'll also look at dividend payers. So let's get started. Welcome, Gerald Fitz. Thank you for joining us. Glad to see you in the chat today. So here's our Google document for our notes for part 2 of our weekly trading game plan for the week of October 23rd through October 27th. We keep our notes for our weekly trading game plans in publicly accessible Google documents so you can refer back to them. Our notes contain links to bonus video, the tools and resources we use to select our top swing trading stocks to watch, etc. If you haven't already seen part 1 of our weekly trading game plan for this week, titled Skate to Where the Market is Going, we would highly recommend you also view part 1, as that contains our market analysis, strategies, trade ideas, again, for this trading week, and provides the input to selecting our top swing trading stocks to watch for the week of October 23rd through October 27th. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. We keep all of our Google documents with our notes for our weekly trading game plans in publicly accessible Google Drive folder. So you can refer back to the notes for part 1 for this week, as well as our notes from previous weeks in that in the Google documents in that publicly accessible Google Drive folder. And you can also find a direct link to that Google Drive folder in the description box below. So first we'll talk about a couple of our trades from this week. We'll look at the charts, talk about some lessons learned from these trades. So our first trade is we got stopped out of our latest long position in O, Realty Income. We'd gotten in just before the ex-dividend date on 9/27 at 15:01. We got stopped out on the 16th at 15:02. You'll see there was some pretty extreme volatility at that time and stopped us out, possibly a little prematurely. So we're pretty much break even on that scalper swing trade in O. But we did get the October dividend, their monthly dividend, and we're going to be watching to see if we can get back into O before their ex-dividend date for their November dividend. Our second trade is on wheat. We looked at the futures contracts for wheat yesterday. We saw wheat's been bottoming. Looks like it may be attempting to break up. We had a position in wheat that we entered at 589 on 9/11. We got stopped out at 601 for a small profit, about 2%. You'll see this was an error on my part when I put intended to put a stop limit in at 590 to protect our profits in wheat when it ran up a little bit yesterday, and I wanted to put that stop in case we saw a late day reversal when I was away from the desk, which we'll see we actually did get. So even though this was an error, it turned out at a small profit versus break even. But the error I made, and this is the lesson learned, is the default order type in E-Trade, where I had this trade. When you close an order, the default order type is a limit sell instead of a limit stop limit. And I didn't catch that before I entered the trade. And even though I put the price down at 590, it immediately filled and sold me out at the current market price, which was 601. It's a little strange that since I was putting a sell in below the current market price, that they didn't catch that and at least alert me to say, hey, is this really what you wanted to do? They do offer a preview, and again, I missed it. I saw the limit. I had my all or none, etc. I had my price. I checked it. But the lesson learned here is, triple check your orders when you're putting them in and make sure the order that you're entering is as intended. And again, even though this was an error, it worked out in my favor. We got a small profit versus break even. Congratulations to all of our fellow BeachBum traders who made profit in these trades on O. on wheat, etc. And again, I hope that our BeachBum traders will, if you get a trade idea from our content and it ends up making you a profit, we hope that you'll share that with your fellow traders and encourage them to join our community. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. Just a quick reminder also is if you would like to get real-time trade alerts when we enter or exit a trade, you can get real-time trade alerts via email and also in our Discord by joining any level of our Patreon. You can find a direct link here in the notes as well as in the description box below. And as soon as we enter or exit a trade, I try to post that to our Patreon members for your benefit. And also, we have a couple channels in our Discord. There's a Thinkorswim price alerts channel that gets triggered. I have price alerts also set up in Thinkorswim. When those get triggered, they automatically get posted to this Thinkorswim channel in our Discord. And you can see when the price alert triggered on my stop on O, that got posted here. If we follow that up with an actual trade, or again, when I got stopped out in wheat, I will reply to the original long posting here in the Thinkorswim channel. It's not directly related to a Thinkorswim alert, then I would reply in the trade alerts channel for example, for options, etc. So again, if that would help you make money trading, help you succeed in your trading career, you can get our real-time trade alerts by joining any level of our Patreon. Again, I don't ever recommend you blindly follow us into or out of trades or anyone else for that matter. But again, if this would help you make money trading, help you succeed in your trading career, you can get that information by and also support our BeachBum trading community by joining our Patreon. So now we'll quickly look at these trades in Webull. So the first one, again, we got into O back, I think, let's see, on 9/27, just before their previous ex-dividend date. So we got in back here at this, support level around 50. You can see it did dip below. We rode that up. I had put a stop in at 50.02 to, protect our money and break even. And you see on the 16th, we had this extreme volatility. They dipped it down just below 50 and then proceeded to continue to run it up. Although, again, Wednesday, Thursday, Friday, it did decline. So now we're looking to buy O back cheaper before their ex-dividend date. And their next ex-dividend date is 10/31, so the end of the month. So again, we'll be looking to get into O cheaper probably this week to see if it's worth it for that dividend. Again, congratulations if you were holding that and were able to capitalize on the slightly higher price appreciation later that week. Here's wheat. Again, it started running up. We had gotten in quite a bit earlier at 589 or so. It had dipped down, so now the previous low is 555. You can see then it started to run up. My intent was to put my stop in at about 590, again to protect our cash, protect our profit on that run up, and I was hoping to be able to manually move that up, and also again protect our cash while I was away from the desk in case of a late day reversal. And you see we got that, so it dropped back down below 590. So again, even though that trade entry was a little bit of an error, it actually worked out in this case. And again, congratulations to any of our BeachBum traders who have profited or are profiting. You may have gotten into wheat much lower than our entry point, and your trade may still be in profit. Again, you can see that rollover. We're going to be watching wheat to get another entry at a cheaper price in the near future if we can. Congratulations to Ricky Kahn. He says he's still in wheat. That's good. Again, protect your profits in case of, a rollover. But again, if you got in at a lower price than our original entry, your trade's probably still profitable at this point. Okay, now we'll talk about our top swing trading stocks to watch. Let me grab a quick drink. I'll go through the updates to our top swing trading stocks to watch list, and then we'll look at the charts. Also got a little bit of a teaching lesson on one of these stocks that I hope will help. So let me grab a quick drink before we go through those. Okay, the first one I want to talk about is ARTW, which is Archway Manufacturing Company. They're a farm and heavy construction machinery company. I will open up their profile in FinViz so I can show you what I was looking at. You can see this popped up in a query as a possible attractive risk reward profile. Aftermarket close on the 18th. I looked at the profile very briefly in FinViz. Looked like it had pretty good support around the 195 area, as you'll see. And based on that just real quick view in FinViz, I added it to our watch list on the 18th. On the 19th, I was closely watching this. It was sitting around 195, 196, and I was just about to enter a buy for ARTW on the 19th. And I reconsidered it. They're heavy machinery, farm equipment, things that typically require financing. We've got increasing treasury yields, increasing interest rates. As you'll see, they also have a significant amount of debt. And so before I entered that buy order, I took another quick look. I saw the significant debt. And then, as you'll see, again, I'll look at the chart in FinViz quickly. You can see it looked like it had pretty good support at this 2 level. It's got pretty good risk reward profile. If you zoom out, still looks, the risk is pretty low. But one of the concerning points is this debt amount. They are profitable. It is very low float. It's also very illiquid, which is, again, why I thought I might have to lead the order and put it, at the 196 or so level, which looked like a stable level in the level 2s. But before I did that, I thought, let me see if that debt is really an issue with the rising interest rates and the rising yields. So I went to ChartMill. I just wanted to get a very quick view in ChartMill on the health of the company, and you can see very quickly, you see their scoring in ChartMill is very low. So value, profitability, all very low. The setup is poor. It's very low. So in a very quick view by jumping over to ChartMill, I also quickly looked at their fundamentals. They got a 2 out of 10, bad profitability, bad health. And so by jumping over to ChartMill and taking a quick view at their scoring, I eliminated ARTW from our watch list. So the lesson here is it's I would recommend, and it pays to do an initial due diligence. We've had ARTW in our database for quite some time back, prior to this, when it was running up in 22 previously. So we have it in our database. They showed up as being profitable, potentially attractive at this support level. But again, by doing just some very brief additional due diligence, I was able to hopefully avoid, what could have been a bad trade. Particularly, again, since it's very low float, very liquid, not optionable. So again, by doing that additional quick due diligence, hopefully I avoided getting into a bad trade with ARTW. We'll keep it in our database, and if things improve, we'll revisit it, do this due diligence. And again, part of the lesson learned is, even if you've done due diligence before, it may be worthwhile to quickly revisit it. And you can use these tools in ChartMill and in FinViz, and you can find links to those in the description box below as well. So now, well, I hope that helps. Please let me know if that helps you make money trading, succeed in your trading career. We hope it helps. Good morning, Flippa the Shippa. Thank you for joining us. So we've had land, which is a REIT on farmland. We've had land in our watch list for a while. Again, we're looking for a good entry point. Pays monthly dividend. Also NSA, which is a REIT on public storage. Again, we've had that one in our watch list for a little while. Again, the REITs have been beaten down with treasury yield, the 10-year going up over 5. That puts pressure on real estate, pressure on REITs. So again, we'll see if we can catch a dip on NSA land. You also see we're continuing to watch O. If you'd like to hear more on our thesis, our quick take due diligence on NSA, you can reference this previous video in the description box or in the link in the notes, as well as on our BeachBum Trading channel. Also, we've had SATS, EchoStar, again, technology satellite company. They're trying to acquire Dish Network. That wasn't received very well. It looks like it's held up pretty good. Again, on a little bit of a dip. We're looking at SATS. You can hear our previous due diligence via the link to this previous due diligence video in the notes. We talked about wheat. Again, we're going to try to re-enter wheat on a dip. Again, if it happens to run away, we'll let it go and we'll pick that up again in the future. If you'd like to get more frequent updates to our watch list, also including price targets, additional information, we generate an automatically generated web page at the close of the markets each day. That includes any updates to our watch list, bullpen, etc., including price targets, dividend information, optionality information. And again, if you would like that additional frequent updates to our watch list, you can get that via joining our Patreon at any level. So now if I jump back over to Webull and we look at our top swing trading stocks to watch list in Webull. Again, another nice thing about Webull is you can have all kinds of different watch lists. So quickly flip over to my top swing trading stocks to watch list. I see the land, again, previous low around 1350. Looks like it's been coming down. I'm watching the level 2s. It's a little bit choppy, hard to trade. You see it tends to pop up after hours, pre-market, and then settles in. So again, I'll have to watch for some support in the level 2s. Again, 1370s looks like pretty good support, 1350 previous low. We'll look at their ex-dividend date when we get to our dividend payers Google Sheet. Good morning, MD. Thank you for joining us. Hope you're doing well. NSA, again, this is the public storage. See, 2987 is the most recent low. It ran up a little bit with the other REITs. Has come down again. Looks very attractive. I just like to see it get some support. It might be that 2987 area, might be 30. Again, we like NSA. We like that thesis of public storage. Again, we looked at O, so anywhere below 50, below 49 looks pretty good. Below 49, previous low at 48.42. SATS, you can see it's kind of just been trailing off, bouncing off that support. Looks like it's got pretty good support around 14. So bumps up a little bit. Looks pretty good support low around 14. So we'll see if that's holding and swing back up. And again, we looked at wheat. Wheat had run up. Looks like it might roll over or it might continue upward. And again, congratulations to those of you that are still in that wheat trade. Gerald's asking about big lots. Let me get back to that when I get to the questions, the Q&A section. I will put that down in our questions to try to answer your question on big lots. I do have some opinions on big lots. Okay, let me grab a quick drink and we'll talk about our bullpen stocks. If you're new to our channel, the concept of the bullpen is not stocks we're watching in real time. There's ones I've identified that may present an attractive setup in the near future. And I just revisit these at the end of market each day. So I'll show you, I could just go through the watch list and Webull, just quickly see if their setup has improved. If so, we put them in the game. We move them up to our top swing trading stocks to watch list. If they break down or run away, then we just take them out of the bullpen. Again, they're ones we're not watching real time. I'm not running my automated alert system against them. I just revisit them end of each day to see if their setup warrants moving them back to our top watch list. So let me grab a drink and we'll go through the updates to the bullpen stocks, and then we'll look at those charts in Webull. Okay, the first one we've had in our bullpen, and I saw, I'm not sure who it was, but someone was talking about retail, RETL, and had commented on yesterday's video about retail. We talked about retail as one of the sectors in terms of skating to where the market is going. Also real estate. Again, we talked about that as another sector of, we're skate to where the market's going. We think, longer term real estate recovery once treasury yields, interest rates stabilize, and we're looking to play that swing using DRN. We looked at DRN in our ETF Google Sheet yesterday. So again, this is one we're waiting, skating to where the market is going. When we see that turn in real estate, you can see we're watching some specific REITs for specific sectors, but when the whole sector of real estate turns, we're looking to play that with DRN, which is a leveraged long on the whole real estate sector. Another REIT we like, but it's a little high right now, is LTC. This senior living healthcare facilities. Again, we've been watching this. We've swung LTC profitably in the past, just kind of waiting for it to come down, as you'll see. MP Materials, this is kind of interesting that it's coming down. Again, you might have heard China is restricting exports of graphite. There's concerns about strategic materials, rare earth materials coming out of China. And MP just had some positive news that they're now able to process some of their rare earth materials within the U.S. So they ran up. They had a CNBC segment also that gave them a little pop, but it's been trailing down. So again, you can hear additional reasons why we like MP Materials in this previous due diligence video via the link in the notes and on our BeachBum Trading YouTube channel. Again, I think there's some positive factors, and it's just a matter of where is the support bottom in MP right now, where we can take it and swing it back up. Again, yesterday we talked about another sector that we're skating to where the market's going, waiting for a turnaround in the Russell and small caps, and the ETF that we like to play based on that swing is TNA. You'll see there's several options in our ETF Google Sheet. TNA, I think it's URTY is the other long on the Russell, and you can pick the one that has the best risk reward or the risk reward profile that you like by using our ETF Google Sheet. We're watching for support or a bottom in the Russell, for example, using IWM. Once we see that bottom support turn back up, again, TNA is the one we're watching to play for that upswing in the Russell and small caps. Similarly, we've been talking for several weeks about another, skating to where the market's going, another swing that we're waiting for, a bottom and support, and swing back up is the utility sector. Just like real estate, we talked about all these yesterday as well, is once interest rates stabilize, the 10-year treasury stabilizes, several of these sectors have seasonal swings, upswings, that we'd like to take advantage of, or at least be prepared to take advantage of. And you can hear several previous discussions we've had about the utility sector and their sensitivity to interest rates via the links to these videos in the notes. We want to look to play that upswing in the utility sector using UTSL. Now, just a note is for those of you that are more nimble than I am and can play, we've seen sector rotations in and out of real estate, in and out of utilities, on a very short-term basis. Same thing with the IWM. If you're nimble and you want to day trade, scalp some of those shorter-term swings, again, our preferred ETFs in those cases is DRN for real estate, TNA for Russell, short cap, or ITSL. Again, these are all leveraged longs in those sectors. So we hope that'll help. Again, if you're a day trader, scalper, you can take advantage of those. So now let me jump over to Webull and we'll look at our bullpen stocks, the charts. Just give me a second. Just a quick reminder, if you're not already using Webull, they're still offering up to 12 free stocks. But if you open and fund an account with Webull, as you see, we use Webull for our market analysis, our due diligence, the majority of our trading. Additionally, they're offering a 5% interest rate on idle cash in your cash account. So if you're not already using Webull, again, you can get 12 free stocks. You can use our affiliate link in the description box below, get your 12 free stocks, and also help support our BeachBum trading community, which we always greatly appreciate. I'm using the online browser version of Webull. This is the stock screen. As you can see, you can quickly and easily flip between watch lists. So at the end of each day, I flip to our bullpen watch list, see what the setup of our bullpen stocks look like. Again, DRN, real estate market, it's been in decline, pretty steep decline. We're just waiting for, where is the bottom? And again, that's going to be primarily determined by the bottom in TLT, top in treasury yields, top in Fed interest rates, which, we have the potential for them to continue to increase a little bit at this time. So again, once we see that top in yields, treasury yields, stability in interest rates, then that's when we'll start to look for a swing in real estate in general. LTC, again, senior living, hospital facilities. And you see it had run up. Looks like it's coming back down. See the previous low at 30.73. Before that, 30.36 or about 30. So anywhere in that range looks attractive. Looks like they just went ex-dividend on the 20th. Again, MP Materials. Saw that little pop the other day when they were on CNBC. After hours, but that didn't hold. Got a pop after that, ran up a little bit, and then it's been pretty much steadily coming back down. So we'll see if this 17 area holds, anywhere, between 17 and 16 looks like a pretty good area. Again, we've got that support level, 15, so we'll see. Again, it looks like it's in decline right now. We're just looking for an opportunity to get into MP Materials. Again, I think the news is positive. Here's TNA. This is the leveraged ETF on the Russell. We looked at the Russell and the futures yesterday. We see it's, recently in steep decline, broke down below previous lows. We don't really know where that bottom is yet. So again, we're waiting to see where IWM bottoms, and then we would possibly be looking at swinging the Russell with TNA. Again, if you're nimble, you can see there's pretty good volatility intraday or across a couple days. So again, you can use these for day trading, scalping as well. UTSL, this is on utilities. It had run up. Again, we saw some sector rotation. Utilities have been so beaten down. There was some rotation back into utilities. Now we're seeing a roll over a bit. We'll see, where that stable bottom is. And then again, we're waiting for that stability in treasury yields and interest rates to swing utilities longer term. Again, possible day trade, short-term scalp opportunities if you're interested in that. So I hope that all helps. In terms of our shopping list stocks, again, we've been, you always have your list of shopping list stocks ready, stocks you want to buy, hold for a longer period of time. Again, we've had a week of, market decline, possible opportunities in some of those stocks. We just, recommend that you beware of zombie stocks, zombie companies. Again, those with high debt, especially debt that they're going to have to refinance. Those are losing money. Again, one of the reasons we stayed away from Art W was their debt and the financing cost of farm equipment, etc. You also hear discussions about solar. It's part of the reason for the significant decline in solar is the need to finance. So consider those factors when selecting stocks for your shopping list. So again, you can reference, if you're not aware of what zombie stocks, zombie companies are, zombie ETFs, you can hear about those via the links in the description or in the notes. So, okay, now we're going to talk about dividend payers. So if anyone has a particular dividend payer, I did have a question from one of our members about a particular dividend payer that they wanted to look at, OPI. So we'll talk about OPI. Sydney Osborne asked, is the dividend safe in OPI? He commented on that against our utility sector video. So I will try to look at OPI, and we'll look at that in a little more detail to answer Sydney's question. And then if there's any other dividend payers anyone else has a question on or would like to take a look at, Easy Mike yesterday was asking about the dividend in TLT, so we'll also look at that and the various treasury dividend payers. Just a quick reminder, you can get access to this dividend payers Google Sheet 24/7, help you build, your schedule of dividend payers. So if you want monthly dividends, quarterly, you can, schedule them in with the risk reward type of profile that you like and the dividend payout that you like by joining our Patreon at the all access or VIP level. And that will also give you access to our ETF Google Sheet and our Puts ROIC Google Sheet as well. We also have a whole series of videos on how to use this dividend payers Google Sheet to find the best dividend payer stocks, and you can access that series of videos via the link in the notes and also in the description of those videos. So again, let me go to OPI first to answer Sydney's question. So we don't have OPI in our dividend payers right now, so we'll look at it in FinBiz. So another tip, you can find the tools that we use, for example, FinBiz, etc., in the link section to our BeachBum Trading YouTube channel. So I'll jump over to also ChartMill. Again, we talked about doing due diligence in ChartMill. So let's look at OPI. The question was, is the dividend safe in OPI? And when I briefly looked at this, one of the things that really jumped out is the debt. Very high debt, recommendations very poor, the dividend percent, yields, very high yield, probably because the price has been declining. This is a office space REIT. I don't like office space REITs at all. You hear about all the concerns with office space, high vacancies. People are just turning over their office buildings because they can't fill them. So, I would stay away from the office space REIT in general. This steady decline, the question Sydney asked was, is this, dividend safe? I would say no, because they have this high debt. Price has been declining. I think this is a dividend trap. The high yield attracts people. If we also look at some of their financials very quickly, see their revenue has been decreasing. EPS has been negative. They've got a small positive this year. We look at the quarterly. It's been pretty stable this year. Their revenue has been stable, but you see their EPS has declined, is now negative, so they're losing money. So again, to answer the question, is the dividend safe? I would say no, because they're losing money. They're going to probably have to cut their dividend or reduce their dividend, again, to cover their high debt and also cover their losses in operating income. So, I could go into more detailed due diligence, but just on a quick take type of look, and the fact that it's an office space REIT, that's something I would stay away from in general. So, Sydney, let me know if that answers your question. I hope that helps. Hope that it keeps, someone from getting trapped in a dividend trap and then expecting that dividend and having it get cut. That's always something to watch out for. And again, in the high interest rate and potentially still increasing interest rate environment, having this high debt is a risk. So I hope that helps. Okay. Let me grab another quick drink. And if anybody, again, has dividend payers you'd like to look at, you can throw them back up in the chat. If I missed yours, please throw it back up there. I apologize, and I'll try to catch it. So again, Easy Mike asked yesterday about treasuries, TLT, various treasuries. So we've been watching TLT, and we've been talking about this for quite some time, as we're watching for a bottom in TLT, peak in the rates, bottom in TLT, and then we're watching TLT and TLTW. They can see their nominal dividend is very similar, 28, 29 cents. But the yield's significantly higher for TLTW, although this is a newer ETF on it's an options covered call type strategy against the TLT. So you can see its nominal yields 10% or over 10%, 12%, whereas TLT is less than 4%. But the adjusted yield is also much better. It's showing better for TLT. If I set that to the 52-week high instead of higher than that, then the adjusted yield is actually better for TLTW. So we're watching those two. When the TLT bottoms and swings back up, we want to make a decision. Possibly, do we want to put a chunk of money in TLT or TLTW? for kind of a longer term swing in TLT. Some of the others, TMF, TMV, are leveraged ETFs on treasuries. They do pay a small dividend, but again, they're leveraged ETFs. So in my humble opinion, they're more for scalping, day trading, short-term swing trading than holding for the dividend. There's also TYD, TTT, so you can find all of those. TYO, these are all ETFs on the treasury. So again, you can find the industry, the category, and the industry section of this Google Sheet as well. While we're here, we were talking about big lots, and I'll talk about that in more detail in a few minutes, but big lots does pay a small dividend, 30 cents quarterly. So you can see the dividend yield, the adjusted yield. You can see the current risk reward profile for big lots here in our dividend payers. So right now it's at 485, support at 373. So, it's got a little bit of downside. Risk reward's not terrible. I guess since we're here and we're talking about big lots, I'll give you my opinion on big lots. And we do have a previous video where I did due diligence on big lots that you can find on our BeachBum Trading YouTube channel. So I'd highly recommend you listen to that. It's got a more in-depth due diligence on big lots. My opinion, although it's a discount retailer, they had some inventory issues where their inventory was mismatched. We did like big lots previous to that in general, the concept of the discount store. But upon doing due diligence further and looking and thinking about their inventory actually going into the store, they have a lot of clothing, a lot of furniture. They've been pushing big tickets. They've been reducing their grocery selection, at least in our area. They also have taken out alcohol out of their area. And I think the big ticket, I think they're shifting in those areas to big ticket, higher margin clothes, furniture, etc., is going to hurt them going forward. They don't have staples like food, alcohol, etc. So, we haven't watched big lots. We're not interested in big lots at this time until they kind of turn around. Again, they also were losing money in the near future. We can take a quick look in FinViz. Again, you can access the FinViz profile for these various dividend payers via the direct links in the notes. So it's a quick and easy way to access their profiles in FinViz. So yeah, they're losing money. So another reason I don't like big lots right now, they also see they've got high debt. So again, several reasons I'm not interested in big lots at this time. Again, short-term trades doesn't really look that attractive. Looks like it's continuing to decline. So again, I don't see any swing trading opportunities in big lots. Again, if you can get short-term trade, that might be good. Also, their dividend may be at risk since they're losing money as well. So again, I hope that answers your questions, Gerald, about big lots. So MD says, yeah, they took alcohol out of their big lots. Years ago. Yeah, same here. And MD says, Walmart or Target over big lots. Dividends already gone. So if they've already announced that they've dropped or cut their dividend, looks like the last time they paid was in March. So yeah, they haven't paid. If it was a quarterly dividend, they haven't paid for the past couple quarters. So again, a lot of reasons, I wouldn't be interested. Gerald says they have a stock buyback, but they're losing money. So that, again, another concern. They have high debt. They're losing money and they're buying back stock. So some of the others that we talked about that we're watching. Talked about LTC. Here's JEPI, JEPQ, some of the popular dividend payers. You can see where they're at, their risk reward, their current. I've been watching these. If they come down a little bit, I might buy a chunk of those. Talked about land. Land actually just went ex-dividend. It has a very small dividend. So again, we're looking for, price appreciation more so than the dividend. LTC, again, similarly, it's 7% nominal, but again, more so in price appreciation. We'll see, goes ex-dividend on the 31st. So it's paying 26 cents. So again, probably this week we'll have to make a decision whether it's worth getting in where the price is based on that dividend, or again, it's really more for price appreciation. 6% nominal, but again, we hold more for the swings, and then just collect the dividend while we're waiting. Some people like SAR for stability. Talked about the treasuries. Someone was mentioning one of these. They're continuing to come out with these covered call strategies on a number of these stocks. So here's the one on Tesla. Somebody was mentioning they're just coming out with one on the Qs, QQQY. It's again relatively new. We haven't looked at it. Again, I'd like to see more history on some of these. Similarly with OARC, you can see it's down quite a bit, very close to its 52-week low. But again, we have a previous video we talked about OARC. This is a covered call strategy on ARK-K. Again, you can search for any dividend stock that you might be interested in our dividend payers Google sheet. If you don't find it here, we may have done previous research on it, and we put those in our research tab, so you can also do a find there, see if we've done previous research on a dividend payer. If you would like us to do research on a dividend payer, just ask us, put a comment like Sydney did on OPI. We'll take a look at it. If it warrants addition to our dividend payers Google sheet, then we'll add it in there. But again, I'll probably, I typically do the initial research, look at the risk rewards, etc., using our Google sheet. And again, if it warrants addition, then we'll put it in our main dividend payers. The gray columns in the dividend payers, we collect this data and then automatically update it at the end of each day. The white columns, a lot of these, the price columns, are based on Google Finance functions. So you can see the real-time or near real-time risk reward profiles using our Google payers Google sheet. Jeff is mentioning PBR, so you can see we have PBR in our dividend payers, pays a 38-cent dividend, pretty high yield. It's an oil and gas company, Brazil. Okay, so that's Petrobras. We've actually done a older due diligence video on Petrobras. Yeah, it's a pretty good dividend yielder quarterly. It's got decent adjusted yield. Looks like it's pretty high, pretty close to its 52-week high right now, so maybe not the time to buy it, but again, pretty nice dividend payer, so I hope that helps. Okay, so if anybody else has another one they want to look at, I'll leave the sheet up for now, and we'll talk about our option strategies very quickly. So additional strategies we use to generate income, in addition to sitting, parking some cash in some dividend payers, is also using covered calls against our existing positions, selling them when stock's going up, buying them back when it's coming back down. Similarly, we sell puts when a stock's going down, buy them back when it's coming back up. You can see our criteria for selecting puts, stocks on which to sell a put, what strike price expiration. in the notes here, and I'll bring up our Google Sheet. And again, you can use this Google Sheet. You can get at 24/7 access to this Google Sheet as well as the dividend payers and ETF by joining our Patreon at the All Access or VIP level. And again, if you hear a stock, declining or they have bad earnings and you want to look at an opportunity to sell a put, you can use this also if you are looking for opportunities to short-term trade options, puts. This may be of value to you as well. Some changes to the puts ROIC Google Sheet for this week. You'll see I've added RMD, which is a semiconductor company that popped up. Put that in the research tab at the 135 strike. I'm just watching. Again, we're looking for return on invested capital, as you'll see in the sheet. So if they becomes attractive, then that's something we might move to our main watch list in the Google Sheet. I removed Moderna from the main watch list sheet. You've seen Moderna's been in steep decline. Pfizer announced poor guidance with the vaccines going forward. And as far as I know, that's really Moderna's only commercial product, only commercial drug is the vaccines, pandemic vaccines. So again, they've been in steep decline. I don't really know where the bottom is on Moderna. Again, the concerns over what kind of revenue they're going to have when they're charging for the vaccines and the guidance that Pfizer's given. So we'll see if they come out with a new drug. I think their platform is valuable. They could possibly use it to generate additional drugs, but getting those commercialized could take time and money. They could license their platform, license their technology, so that's potential opportunity. So we'll be listening for news developments on Moderna to see if it turns around or future opportunities. But for now, no reason to watch it. And again, I don't know where the bottom is. Similarly with Albemarle, it's broken down, as we'll see. I'm not really sure. I'm going to change the strike on Albemarle on Monday to either 135 or 130, depending on where it looks like the next stable support or bottom is on Albemarle. Welcome, Alan Krantz. If I missed you before, thank you for joining us. Hope you're doing well. So we'll take a quick look at the Google Sheet. Also, we have a whole series of videos on how you can use this Google Sheet to sell puts, buy back puts, scalp, generate your own dividends. You can access that series via the link in the notes. We also have a playlist on trading options in general. So on our YouTube channel, so you can see how to sell covered calls and E-Trade, Webull, what cash secured puts, how to sell puts, etc. So you can find all those videos in the options playlist in our YouTube channel. So let me grab a quick drink and we'll quickly look at the puts ROIC Google Sheet. So on the main watch list tab, you can see some that look like they have somewhat of an attractive ROIC. Showing up in green, Disney. We're already long Disney. If you would like to sell a put, play the wheel strategy on Disney and see the ROIC really isn't all that attractive. Similarly with, this is Generac. I don't really like the thesis. With Generac, it's kind of attached to both the decline in new home sales as well as potentially the solar. But it does offer almost a 5% ROIC at this $5 price. Experience slowly creeping up again. You see there isn't a whole lot with the return on invested capital. currently above 5%, and I'm getting 5% cash. You can get 5% interest on your cash in your Webull cash account, or I'm getting over 5% on cash in my Fidelity account. So again, why risk the cash if you're not getting better than 5% at this point in time? Although again, those short-term returns, scalping these options, you potentially could compound those returns and generate over 5%. So it's something to consider. Again, Disney, if you get it about $4.95, you can get almost to 5%. So again, we collect this options data using automated systems. The gray columns get updated at the end of each day. Pricing columns are based on Google Finance functions, so they're near real time, 20-minute delay, but you can see who's going up or down. If they're going down, they show up as green, opportunity to potentially sell a put. So, and then you can see where the current risk reward profile looks like, support and resistance, etc. And so you can also use this for short-term, scalping puts as well. If it's red, means it's going up. If you've already sold one, then you can look at potentially buying it back. You can see where the daily high and low from the previous day, and the 52-week high and low, and the delta, etc. On the research tab, again, you can see Albemarle, but again, I had a 150 strike price, so this data is using the 150 strike price. Currently, it's at 138, so I'm going to lower that to either 130 or 135 on Monday, and then we'll get the data for what the put looks like at a 135 or 130 strike price. Again, N phase is solar related. I don't really like that one. Talked about Moderna. So again, I'm not sure, right now Moderna's at 80. This data is for the 90 strike price. So if you really think it's going to rebound, we're looking to buy shares in O, not really puts. And again, RMD is what I'm watching, but again, the ROIC on it is pretty low. If I have identified a higher sell price, so the previous peak in some of these. So we see GM, we've talked about Ford and GM, kind of watching those. But again, the ROIC is still below 5%, but GM's looking potentially attractive. Again, potential catalyst if they get a UAW deal. But again, long term, I don't particularly like the big three automakers. This is just for playing a potential catalyst, scalping, making some money, selling and buying back these puts based on that catalyst. So I hope that all helps. So again, if you would like us to do research on any put options, just let us know the symbol, the strike price, the expiration, etc. We can plug it in, have our automated systems collect that data, and then that will show up in our puts ROIC Google sheet for you for your consideration. So again, if you have any other questions, stocks you want us to look at, options, dividend payers, you can put those in the comments of the video. You can also always ask us questions in our Discord. Our Discord is free to join. With the exception of a couple of the channels that I pointed out, all the other channels are free access to join. You can find an invite to our Discord in the description box below. Also, you can find it in the links section of our BeachBum Trading YouTube channel, as well as links to our Facebook group, our Reddit community, links to all our social media profiles. So plenty of ways you can contact us, ask us any questions, anything that we can do to help you succeed in your trading career, help you make money trading. Please let us know, and we'll do what we can to respond to those questions. We'd also love your feedback on how we can continue to improve our weekly trading game plans, our other videos, our tools, our Google Sheets, our tools, systems, resources, etc. Let us know, how can we add more value for all of our fellow BeachBum traders. So we hope that you like this content. We hope that you find it helpful. Please let us know, how can we improve? We hope that you will share. We hope you'll hit smash the like button on this video. Help us get YouTube to share our content with more traders around the world. And we hope you'll share our content with your fellow traders and friends. Let's help continue to build our live chat, build our Discord, build our community of traders helping each other out. That's what we're all about. That's why we're here, to help you succeed, help you make money trading, help you succeed in your trading career. So we appreciate all your support and all your help in building our community. And we hope good luck and have a great trading week, October 23rd through October 27th. And have a good luck and have a great trading week. Bye.